Hello, Namaskar. Welcome you to the SAAR Analysis. I am Chaman Nayak and here's my take. What if one number quietly determined whether a nation could survive a financial crisis, defend its currency and attract the global investment and project a geopolitical influence all at the same time? And that number is 674.2 billion. India's foreign exchange reserve have increased by 7.3 billion in just 1 week, reaching up to 674.2 billion, one of world's largest reserve holding. On surface, it looks like another economic statistic, but beneath the headline lies a story about financial resilience, strategic autonomy, and shifting or balance of economic power in an increasingly uncertain world. Here's what evidence speaks about, and the evidence is quite straightforward. According to Reserve Bank of India, India's Forex reserve rose from 666.9 billion to 674.2 billion during a week ending on July 3rd. Well, this increase was driven by stronger foreign currency and significant increase in the value of gold reserve. But this isn't simply about accumulating dollars. The foreign exchange reserve function as country's financial shield. They allow the central bank to stabilize its currency during the period of volatility, finance essential imports such as energy and technology, and reassure international investors and reduce the vulnerability during the global financial shocks. In today's geopolitical environment where the wars, sanctions, supply chain disruption and the currency fluctuation have become increasingly common, this reserve strength has become a strategic asset, not just an economic value. India experienced this reality earlier this year following the tension in the Middle East. Pressure on the rupee required RBI to intervene in the currency market by selling dollars. Those interventions were possibly because India has built a substantial reserve over many years. Now, this demonstrates a broader strategic principle. Countries with a stronger reserve possess a greater policy independence. They are less dependent on emergency international financing and more on capable of absorbing this external shock. For multinational companies, the sovereign wealth fund and long-term investor reserve adequacy is often interpreted as a measure of macroeconomic stability. The composition of these reserves also matters because latest data shows that it gains not only as a foreign currency asset but also in India's gold reserve. Well, around the world, the central bank has steadily increasing gold holdings as they diversify away from excessive dependence on any single reserve asset, reflecting a broader transformation in international monetary system. India's reserve strategy therefore aligned with the global trend, preparing for an era where economic uncertainty is becoming norm rather than just exception. Now, here's my take. A large forex reserve does not automatically make any economy stronger for sure, but this sustainable growth still depends on productivity, manufacturing competitiveness, export, innovation, and investment. But strong reserve buys something equally valuable, and that is strategic time and economic flexibility. They provide governments with the room to respond calmly when the market panic and allow nations to make decisions based on national interest rather than financial necessity. This is increasingly becoming a geopolitical advantage because in 21st century, power is no longer measured by the military capability or the economic sizes, it is measured by this resilience. And India's 674.2 billion forex reserve is more than just a financial statistic. It signals that the country is strengthening its ability to navigate an increasingly fragmented global economy. We all know because in the age of uncertainty, the nations that control their financial stability are often the nation that shape the future. That's all from today's analysis. I will be back with another episode. Till then, thank you for watching this.